Okay, peeps, welcome back. So today we're going to be going over our monthly video for dividends and profits and crypto and all that jazz. So with that being said, let's get it. Okay, so we're going to start with M1 Finance. We'll basically just go over the dividends for the entire month. I'm not actually going to do this with Robinhood, and the reason being is because it would take eons to do this, but we did make videos for the last 3 weeks. We can kind of show you guys maybe some of the dividends that we got paid for this week. Basically, let's actually see what that is. So that would be pretty much from, I guess it would be from the 23rd to roughly about the 30th or so, something like that. So we'll take a look at that. And also crypto portfolios and other stuff like that. Just a quick note on the Grayscale Trust. So haven't added anything to these yet. But we did also get $1.21 in basically the SPACs, which is the high yield savings account that Fidelity has. So let's get into the dividends here. So we got 2036 from PDI, 4 cents from PFLT, effectively $5.09 from Enbridge because again there's international tax. 4605 from Triple QY. We exited the Defiance ETFs with the exception of SPYT. When crunching the numbers, we did take a capital loss, but the dividends were greater than the capital loss. And you got to understand from a tax perspective, the realized losses can be used to offset capital gains that was made this year for next year, while the dividend income is, going to be taxed at 10, 20% or whatever. So it ultimately, it actually ends up coming out to a net positive is what I'm trying to say here. So 4605 from Triple QY, 86 cents from APLY, 1811 from NVDY, 177.16 from Tesla. We do still have Tesla, just so y'all know. 309 from OARC, $4.40 from OARC again, $2.03 from TLTW, 23 cents from Beto. Go a little bit further back here. So $1.40 from Walgreens, 3 cents from 3M, 45 cents from HRZN, 1 cent from PSEC, 762 from RA, 1643 from EFC, 344 from USOI, 1 cent from Maine, 41 cents from CRF. This should be a combined total of $20.13 from ACP. I'm not sure why it comes split like that, but it should be about 2013. So $1.09 from CLM, 4 cents from BSTZ, 1792 from RIV, 48 cents from SVOL, 1439 from OPP, 856 from RYLD, 606 from QYLD, 4 cents from PFLT, and 1 cent from SCHD. We did actually used to own SCHD, believe it or not. So I'm actually going to go over to the portfolio now, just to show you guys that we do actually still have Tesla. So you can see right here at the top, we do still have Tesla, and because of Tesla's resurgence, we're actually only down 20% when it comes to total return at this point, which again is not great, but considering we haven't added anything to this for like a year, I mean, it could definitely be better. There's no question about it, but Tesla's over $200 now. I suspect, especially once the Fed starts cutting rates, Tesla probably will go back up to like $700, $800, maybe even $1,000 a share, like it did before the stock split that Tesla had sometime before. I forget exactly what it was. So the Tesla share is still there. Nothing's changed from that front. So in terms of the total amount that was paid, that's $375.94, as you guys can see here. So now I'm going to go ahead and go over to Robinhood. So I could go over the options premiums here, but I'm not going to do that. I'll just, actually what I'm going to do is I'm going to list them off for you guys right now for basically the last week. I don't have the numbers right in front of me because again, this is a monthly video. This is not weekly. So in terms of last week, Mara 624 entry date, 628 close, $15 times one contract, minus $4 to close early, so $11. Riot 624 cover call, 628 close date, $8 in premiums minus $1 to close early, so $7. AMC 624 entry date, that's covered call. Exit date 628, that's $4 times 9 contracts, so $36 effectively. HUD 8 was $50 times 1 contract, but it cost $415 to close early. But then again, that was offset by profits, so the profits were actually greater than the cost to close the contract and options. So it's a net positive. Riot 627.24 cover call. Close dates is 7/5, so it's not here yet. 11 times 1 contract. Mara 628 cover call 7/5/2024, $54 times 2 contracts, so $108. Riot 628 cover call 7/5 13 times 1 contract. 7/2 or sorry, Riot. Well, okay, never mind. We're not going to count those. So, because that's for July, that's for the month that we're currently in. So, if I just take a look at this at a bird's eye glance, it looks like roughly about 11, 7, so 18 plus 36, 54. I'm not counting the HUD 8 one because, again, that was offset by profits. So 54, see 1165, 108 should be, I think, 173 if I'm not mistaken, plus 13, 186 plus 16, 202. Oh, wait, no. Sorry, that's July. So roughly about $186 on the week is what it looks like. Okay, so let's go over the positions. As you guys know, the Yield Max ETFs, by the way, are going to be announcing their dividends tomorrow for the single stock ETFs, for those of you guys that don't know. So let's go over some of the different dividends we got paid. So you guys can see we got clipped just recently on the 28th, so $69.29. And by the way, this is going to cover basically what would have been the weekly video for this week, but we're overlaying it with the monthly because, again, it doesn't really make sense to do both the weekly and the monthly. So we'll just kind of skim through what would have been basically paid out this week. So TSLP, been taking profits on and off on this position for a couple of days now, so that's why it looks like that. So $12.40, as you guys can see, on June 27th. So FEPI, I believe, is another one that we just got paid from. FEPI had a nice recovery today too, which is great. So it's basically back up to break even for us, at least. Some people probably sit in quite a bit of profit right now, I can imagine. So $113.01 on the 26th. Again, if I was to calculate this based on the start of last week, pretty much into the close here on Sunday, that would start on the 23rd, so this does count. So continuing to go down the list here, we did add some shares of Riot, just so y'all know. We got that up to $300 or 300 shares and threw on another covered call. Tesla, nothing's changed with Tesla except the price. The price is going up, which is great, but we haven't actually bought any. We're just simply holding at this point. A lot of people are saying Tesla is going to outdo NVIDIA in the future. I'm not so sure about that. I think this video isn't about speculation, but I think NVIDIA will remain the kingmaker of the Mag 7, in my opinion. But I think Tesla will be up there in terms of numbers. It's possible Tesla could be number 2. And it may even be possible that maybe NVIDIA and Tesla swap places as number 1 in the Mag 7 throughout time, depending on how they perform. So going down the list here, I believe another one that we got paid from should be QDTE. Yep, on the 28th, so $29.79. As you guys know that are looking at the distribution or the declaration dates, they just had a declaration. I don't remember what that is. If you guys are curious, go ahead and look it up if you actually own shares of this. So we added some shares of SoFi as well, trying to get this up to 600 to 700. There's a specific reason for that. I will talk about that at a later date. So SPYT should also be another one. $11 and wait a minute. No, I take that back. Sorry, SPYT is not Not as of right now. I keep getting these confused with things like Clip and Feppy and stuff. Man, I'm starting to think we got way too many positions here. So let's see what else we got. Not YMAG. As you guys know, we have AIPI. So I think that's pretty much it in terms of the dividends for this portfolio. But the dividends that we got paid out for the entire month on Robinhood was $1,391.12. That does not include profits, and that also does not include options premiums. So let's go to Webull now. So one thing I want to point out before I go over the dividends here, as I'm sure you guys have probably noticed, Clip is no longer here, so we basically sold out of it. So what is the reason for this? Well, the main reason why we opened the Webull platform in the first place was to swing trade. Okay, as you guys see, they have a nice setup here. Okay, nice charts. You can put your limit order with the amount of shares that you want if you're going long, trying to make a profit. They have a stop loss percentage and a limit price percentage, so you can actually set your take profits and stop losses accordingly ahead of time. This is a technical trading setup. Okay, this is not somebody just looking to buy and hold some shares and get dividends. So we were looking at this for technical swing trades. Okay, but since we use TradingView and we have Robinhood and we can just go buy literally instantaneously and get out instantaneously, there's no wait times on settling of funds or anything like that with Robinhood, which is a definite bonus. And there's also 2x leverage and margin once you get past a certain limit. I forget what it is. We don't really feel the need to use Webull anymore in the immediate short term unless we're going to have like a massive $30, $40, $50,000 account for swing trading stocks. The other bonus about Robinhood is we really like the options side of Robinhood. It's really convenient. The layout's nice. The execution's really good. And Webull does have options too, but again, we were just using this for technicals. So we got rid of Clip. We're not counting this in our income for the month, but it was basically $1,000 loss on Clip and about $1,300 in dividends. So again, it is a net positive. And the loss will be used to basically offset gains during tax time next year. And we're probably going to need as much of that as we can get, because if crypto really is truly going to moonshot by the end of the year, which I'm still convinced it's going to do, just from the native crypto portfolio we have right now, we could potentially be looking at, like, I would say conservatively, a 7 to 10x, which would be like $150,000 to $200,000 just from that. That doesn't include everything else going up when the Fed cuts rates. So that's gone as of right now. So we'll take a look at the dividends here. So the dividends that we got paid was $33.63 from OARC, $5.66 from Aptly, and $84.63 from KLIP. We're probably going to sell out of both OARC and Aptly and just simply move that money over to Robinhood because of multiple different reasons. And we'll come back to this at a point in the future when we have, like 2, 3, 400,000 more, and we can just have a separate portfolio here if that's what we want to do. So in terms of the total dividends from that comes out to $123.92, as you guys can see right here. Now let's go over the profits. Okay, so TSLP, we got $13.55, FEPI $67.35, and these are profits. These are not dividends or options. This is totally separate. Okay, $1,090, I should say, from HUD 8, $39.03 from NVIDIA, YMAX $9.42, Riot $76, QDTE $129.47, SPYT $14.70, YMAG $14.88, OPP $15.75, which comes out to this number right here, which is $1,470.15. There was also the savings interest from Fidelity, which is not that much. I mean, as good as the interest is at the 5.5% rate, it's still really not that great compared to the options premiums and the dividend paying stocks and ETFs that we own. So, just my opinion, but I think it's probably more rewarding to be in the market. Again, we do have some money set aside in cash and cash equivalents just because, if we ever need to use the dry powder. But we also have a lot more skin in the game in terms of exposure to risk on assets, which has paid nicely. So in terms of options premiums, the total comes out to $564 for the month. That includes all the money that we made from options and the money that it cost us to close contracts early from options. So this is the total number. Basically equalized out is $564. So the total that we made on the month, $3,926.34. So pretty good. It's about $1,000 a week. Can't complain about that too much. So the last two things I want to go over here is the native crypto portfolio, and then we're going to go over the dividend tracker. So the main one that we've been adding to as of this last month pretty much has been AIOZ. So we have nearly, I think, $2,000 in this with an average cost basis of 78 or 79 cents. So just shy of 80 cents. So we haven't really been super aggressive with it. We've kind of just been slowly adding, as you guys can see here. So basically 96 tokens on the 27th, 28th, another 64, 29th, another 62, 30th, another 65. On the 1st, which was yesterday, another 62. And today, another 62. So we're just slowly kind of nibbling away at the position. We're not getting really aggressive with it yet. The reason why, and I'm actually going to show you here on TradingView. So you'll have to excuse me. We were trading futures this morning, so that's the reason why you guys are seeing the futures charts, not the actual charts that we take a look at on these videos. So it does, we changed the charts a lot. Let's just put it like that. So going down here, I want to take a look at Bitcoin, and there's a reason. I'm going to get to the reason why we're not getting super aggressive with this yet. Okay. So pretty much what we're looking for here is we're looking for Bitcoin to either break above this flat level and this downtrending line here, or below this trend line and the bottom of this flag. Okay. Because if it breaks down below the support zone and below all these other levels of support over here, the drop could be substantial. It could go to 50,000. It could go to 40,000. It could even go as deep as maybe like around even a little bit below 40,000, like 37,000. I mean, if we just take a look at from the current price to where it currently sits, it's down 17%. If it gets, let's say it does get down to 50,000, that's a 30% drop on Bitcoin. 40,000, or maybe just the top here, 44,000, 40%. And if it gets all the way down to this primary macro trend line here, minus 47% on Bitcoin. So we don't want to get super aggressive unless we see a major drop in the price of Bitcoin, okay? Because that's, in my opinion, that's the time to get aggressive. Again, I don't think that the crypto bull run is over. Okay, we haven't even seen a real all season yet. But again, in order to confirm it, we got to see some kind of move above for Bitcoin to make its ultimate peak, get a move above the top of this flag, and then Bitcoin dominance to roll off and give us the alt season that we're looking for. So if it gets a breakdown below the supports, basically what I'm saying is we're going to be looking to get much more aggressive with our crypto purchases at that point. So, but since we're stuck in no man's land, we kind of just are half in, half out. Since the market is half in, half out, it doesn't make sense to get super aggressive here. And then, it dumps off a cliff, and then we basically have nothing left to invest. In my opinion, that would not be smart. That's just my opinion, though. So, dividend tracker, as you guys can see here, we've been getting quite aggressive ever since Bitcoin's pretty much been doing nothing. We have added to altcoins, but we've been getting much more aggressive with buying dividend paying stocks. There's a couple reasons for this. Again, ultimately, we want to cash out of crypto, move that money into dividend paying stocks and options for passive income until the bottom of the next bear market in crypto. Number two, just to be able to live off the income, walk away from the job and say, okay, screw you guys, we're out of here, or in this case, for me, for my job, I'm out of here. And option number three, or reason number three, is to have even more passive income to buy even more crypto, because the more cash flow you have, the more assets you can buy, including crypto. So that's how we're looking at this. So basically getting the cash flow up, and then assuming that Bitcoin does drop, which it may not necessarily do, but never really know. I mean, crypto is very fickle. Then our cash flow is much more substantial than it used to be, which means it's easier to buy more crypto on the cheap. So as you guys can see, the portfolio has gone up substantially. So this includes Bitcoin miners and some other random stocks like Palantir, SoFi, and AMC. Of course, still bullish on AMC. So you guys can see the total passive income expected here in the month of July. And of course, the distributions for the single stock yield max ETFs come out tomorrow. But as of right now, as of the previous distribution, it would come out to a total of about $2,600 for the month, about $30,000 annually, 47.6%, 42% yield on cost. Total invested, you guys can see the numbers there. It's quite a bit. So in terms of what we have added to, we've added to AMZY. We added the AIPI position, intend to add more to that coming on to the first pay date here in July. Added a little bit more, I think, to Aptly, quite a bit more to Coney. As you guys can see, we have nearly 200 shares now. Crash, that's a new one, so 53 shares. Feppy, almost 100 shares. GUI, 100 shares. We actually got to get rid of IWMY, JEPY, and QQQY. We don't have those anymore, so that's actually basically, we'll probably basically just take $100 off of this, so it'd be roughly about $2,500 a month. I didn't realize that was still in there. So let's see what else we got. We got MRNY is at 100, MSTY is at 100. NVIDIA, we moved our position up on that. We're very bullish on NVIDIA and NVIDIA. So 125 shares, ORC 168. Let's see here. QDTE, we massively increased this one, so 96 shares. And I'm trying to see what else we got here. I believe we added some to SPYT, but not a lot, so roughly about 48 shares. Squeeze up to 100 shares. That's a semiconductor company. Square, or sorry, not Square. Is Square? No, I don't think it is a semiconductor company. I'm sorry, I'm mistaken. It's some kind of social media company, but they have exposure to Bitcoins. So the crypto bull run's not over yet, so I suspect likely this is still probably going to increase in price. TSLP cut back a few shares on that. That's because we've been taking profit. You guys know how we run that strategy. Basically take the profit plus 5% off the top of the initial cost basis and go throw that money into something undervalued and then put the other 95% back into the same position. So we're basically scaling out of this position and scaling into something else. And we rinse and repeat these kind of just in whatever combination they show up. YMAG, that's also massively increased, so 108 shares. YMAX, 252 shares, and that's pretty much all that's going on right now. So anyways, I guess the last thing that I probably would say here is that the total passive income, or total income that is getting paid outside of work right now is actually not $2,500. If I were to include the options and also the ad revenue, it actually comes out to roughly about $4,000 a month. So it's quite a bit more than this. Anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.